Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
All right. Good morning, all Auvorians. Let's set up for our forecast trade week call. Welcome. My name is Steve Vetterl. On the camera, you get to look at my ugly face for the next 30 plus minutes. Make sure we're sharing screen too. And we're now optimizing for sound. So there we go. Again, welcome. Let's do a quick double check on the sound. I'm opening up the Q&A window. I don't have to repeat all of that fun stuff anymore. They've got a video for it. Gotta love it, right? So for those just joining us, welcome to Forecast for Trade Week Call. Today's Saturday the 23rd. My name is Steve Vetterl. You get to see my ugly face on camera for the next 30 plus minutes. So let me do a quick sound check, if I may, in the chat window. Somebody wants to kindly throw in. Hopefully the sound's coming across good. Don't need to wear the headset anymore. Finally got my lazy ass to buy a decent microphone. And, you know, it's funny because I'm actually doing a lot of client broadcasts in Zoom. And they're like, hey, Steve, you're not wearing a headset anymore. I'm like, nope, I actually bought a microphone. Went out and some of my production guys, buddies in LA, told me to buy a Rode microphone. So I bought one in any case. So let's talk a little bit about the calendar this week. Let's talk a little bit about what took place. As many of you may know, the dollar gained after a 3-day pullback, essentially the risk rally taking a breather. So dollar pared its gains after upbeat US data. So dollar drifted higher on Friday after 3 straight days of losses. Essentially, riskier currencies fell as fairly bleak non-US data, mostly out of Japan this week, by the way. It was pretty grim. No surprise there, right? So as a safe haven, US currency tends to rise in times of financial uncertainty. It certainly was the case for at least a couple of days last week. So looking at the Forex Factory calendar chart for next week, Monday, bank holiday down in Aussie. Tuesday, we've got more Australian dollar information, CPI, which is the consumer price index, by the way. Wednesday is the FOMC statement, guys, so the press conference. Remember, this is probably, in terms of red folder events globally, this probably is one of the bigger ones, okay, outside of a non-farm payroll, which is typically a jobs numbers on Friday. So be aware. Thursday, advanced GDP, not as much of an event as it is. So typically I dive right into the charts. I'm a chartist by trade. I think talking about just kind of what's going on from a macro sense is probably on deck for today. Just understand that with a whenever a new administration takes over, the Treasury, in many cases, the head will change. So Janet Yellen is more than likely going to be sworn in as the next Secretary of the Treasury. What does this mean for the dollar? It means that, at least in my opinion, a very smart individual who has run the Federal Reserve essentially is being tapped to be Treasury Secretary, right? Now, unfortunately for corporate earnings and maybe the US dollar, or I should say corporate earnings of US-based companies, she has signaled that potentially there may be some increases in corporate tax rates, closing some loopholes, essentially going after those higher tax brackets for the wealthy. I would assume that from what I'm catching a whiff of, it's going to be individuals above 7 figures, so 1 million and up in annual income are going to be targeted, but that any of this more than likely will not be put in place until 2022. I mean, let's face it, we're in a pandemic. Last thing you want to do is stifle a potential return to growth, right? So, but just understand that's what's going on. Obviously, the currency markets have sold off. Or I should say the dollar has sold off related to that because the current administration is signaling that they want to do additional stimulus. Okay. So as I've talked ad nauseum about that, that is a devaluing event for the country's underlying currency. Okay. So let's dive a little bit into the charts. Before I do that, though, since I got a lot of questions on this, I'm going to show a candlestick chart. And feel free, by the way, Q&A window's open. You can always put your questions in the Q&A. That way I can get them and delete them and all that fun stuff once they've been answered. So that's kind of the best way to go about doing it. But essentially, this is a candlestick formation. If you guys can see this, I get a lot of questions on this. Really is pretty easy. You know, essentially you have the highs, you have the lows, right? In both the green and red, green being a day that finished up, right? Red being a day that finished down, okay? The only difference is the close and the open. See right here? These are flip-flopped on both of these candles. So a green candle will open up and maybe have a whole range of this entire day, right? And then it'll close higher than where it opened. It's a green candle. It's that simple. Red candle is the exact opposite of that, okay? It'll open up higher, may range around the whole day, right? But it'll close lower. So the body essentially is called the real body. Well, there's different terms for this. Essentially, it's the body of the candle. And these are what's called wicks. I don't call them shadows. Some people do. Doesn't matter. The point is the analysis that is taken from the actual formation of the candles and the patterns of successive formations as well, right? This is relevant because we have a head and shoulders forming on the daily on the USD Swissy. I'm going to show that as well as a couple other things. But I thought this was good. I tend to have a tendency to poke around on Forex Analytics website. These guys are actually really good. If you're not familiar with who Pip Czar is, he's actually right over in Arizona across the border there. Real good in Forex analysis, mostly for manual type of trading. Without the assistance of Arrow. By the way, guys, let me, I don't know if I can paste this or not. Try. There we go. See if this shows up. These are the Telegram channels for Gearbox, Variable, and the two for Arrow. So Arrow has a very, very lively chat. Tons of questions coming in and out and posting the performance, which is actually really good to see. I just caution everybody on, spending a lot of time talking about performance in a chat room that, quite frankly, should be positioned for, just getting the software straight, getting 10 strategies running smooth, and, obviously the memorization of thereof. So those are the Telegram channels. If you're not set up in Telegram, it's becoming a tremendously popular platform for a variety of reasons in the last week. That is Candlestick. We've gone through Forex Factory. Let's take a look at the charts. This is tradingview.com. We're going to start off as always with the chart of the DXY, US dollar. I just like to analyze this just by itself. I could put that candlestick image on Telegram. I don't know, am I breaking any copyright infringements by posting a Forex picture for Forex Analytics? I don't know. But I'll go ahead and do that. So just real quickly here, because I've got some questions piling up. DXY, daily chart, tradingview.com. These orange lines are typically support levels, red typically resistance, although they sometimes can show up flip-flopped. Varying degrees of resistance and support. Not as important we take a look at that as we just, in terms of the analysis of what's going on. Notice we've really held quite well, with the dollar inside of right under the 91 to the low 89 area. It's held pretty well. So we had some lift, then things came right back down, as you see, as I was talking about at the beginning. I expect us, for lack of a better direction, and who knows, I could be wrong, right? I think we're probably going to stay within this range. So ideally, as I put my foot in my mouth, typically the trend following and martingale based cost averaging systems do better when they're range bound, right? And there isn't any real big breaks one way or the other. Can't say that for some of the other currency pairs we'll get into next, but I always like to start with that first. Euro US dollar, which almost looks the complete polar opposite of the DXY chart. So I look at it first. It's one of the most actively traded pairs on the planet by a big margin, by the way. So still within the range. We've arguably been in this range since December 2nd is when we broke out. Notice the support levels that have been built. Notice the fact we have one of our SMA lines also showing up at this level, right? A little bit of confluence, if you will. Confluence is nothing more than two or more factors showing up in a given area, right? Could be Fibonacci's, could be support resistance, could be Bollinger Bands, Keltner channels, all that stuff, and or just good old fashioned price action forming support and resistance levels. So what do we take from this? We take that more than likely I have no problem currently accepting trades on both sides of the Euro US dollar if I had those NAV versions of the software. Now, I know a lot of subscribers have decided to increase, which I think is a great thing because I'm always pitching diversification. We have essentially, as financial advisors, we live by this rule in any respect, okay? But pitching diversification among maybe having Arrow, if you can afford it, or you brought a bunch of people in, that license is free, which is great. Then go out and get another license for a different, whether it's a variable, whether it's Gearbox, Stratamus, Neo. I'm going to be eventually taking a look at all these others once they have a broader scope of time spent on Neo and Stratamus. But the only thing that I haven't seen, and maybe I've missed it, just because you can only spend so much time peeling through Telegram hours a week. Do we have, maybe this is a question for anybody that wants to enter, do we have a Telegram channel set up for like a chat for Stratamus or a chat for Neo? I don't know the answer to that, so I'll just ask the group if somebody wants to post the link to that Telegram channel, because I haven't seen it. Now, I haven't gone into the back office. I've been a bad boy, just like I talked about. I actually wasn't in the back office this morning. I probably should have been, right? Okay. No chats from company sides. That's good. The UPS guy pulling up. In any case, what else do I want to say about this? Pretty much it. Let's move on to GBP USD. Now, notice we keep coming closer to this top part, and I'm hoping that we may stay inside this channel and may visit the lower part, because I think if there's a chance we break out above this, I'm pretty sure we're going to run, which is going to be difficult for some types of cost averaging software if we break from this level and start to run. Here's why I say this. Actually, you have to go all the way back to a weekly chart at the beginning of 2018 to see where more than likely, if we do break with some decent volume and spend at least a day or two closing above this level, right? This whole 3665 level is pretty important. We could absolutely just race right up to 41. This will put some pressure on cost averaging system software. Okay, so just be on alert for that if GBP is one of the pairs that you're trading. So, and with that being said, do keep in mind that one of the great things about, obviously some of the software just trades a single pair. Some of the software, you guys trade it yourself manually, right? But a lot of the other pieces of software, especially variable, is going to be, changing different currencies equally. So if you're running variable and you're putting the time into, which I highly suggest from a risk standpoint, make sure you look at it, because the sun's constantly changing up pairs. And it really has a lot to do with a number of factors, ATR, right, the average true range, but it has also to do with the win rates on the pairs. We want to stick to the most winning pairs, which are typically pairs that are acting the way they should, right, in terms of patterns. So just keep that in mind. But I wanted to put out a little mini alert on that. If this breaks this line decisively, which is usually defined by spending a day or more above that area, and then the shorts, which are probably piled up here in mass for large funds, are going to start to get nervous. They're going to have to buy the cover, which is going to lift the price even more. So you could what's called zipper up into that next region. So just keep that in mind. Let's take a look also, since we're on the precipice, if you will. So I'm starting off by showing a weekly chart, USD JPY. Notice this channel that we've been enacting quite well for a period of time. If we drop back to just the daily chart on, you can see how we are. Dollar lifting against, obviously, the yen, mostly based upon some of the weaker data coming out. Still acting pretty decent in terms of trend channels. Notice how these lines of moving average here, the green line, is keeping us somewhat tight. So at some point, if we break above this, we'll probably head towards that 104.20-ish area. And hopefully, we stay within inside this. Seems to be acting quite well. USD CAD, same thing. There was a lift, obviously dollar lifting, maybe a little more so in relation to this currency than others. $26 area. Notice we have to go all the way back. It's one thing I love about TradingView. Allows you to just drag and go back and easily see where the next area probably is, which is down in this whole 2350-ish area. It'll probably be a fairly straight line if we could decisively break under our current daily support level here. AUD CAD. I would say probably should be a resistance line printing up here, but I don't see essentially the 9,900 levels holding. Do note these two crosses don't necessarily, whether it be a golden cross or a death cross, one versus negative the other. It's not as important that one understands. Just to recognize the cross can always put a potential, in this case, a lift into it. This particular cross didn't really do much. All right, so this is the chart of, and this is just in my format, but I didn't feel like drawing it all up today. So I actually cut the one from maybe a bit hard to see because I can't. Let's see if I can make the page a little bigger here. No, maybe not. This is an inverted head and shoulders, guys, on the daily. So we're looking at USD Swissy, and we definitely could see a rip past this line. This is the red line, which is called a neckline. So if we can get past this area, see, this is a bullish pattern, just so you understand. You have two shoulders and a head. This also could look the other way, completely flipping it upside down on its head. That would be a bearish pattern, but this in case it's a bullish pattern. Remember, these patterns always have a lot more legitimacy if they're on a daily chart, certainly weekly and absolutely monthly, right? Higher the time frame, the more solid the pattern setup is in terms of pulling out of that pattern at some win rates. And it hasn't changed in 30 plus years of technical analysis. Everybody's always like, hey, things are changing, and we got to bring out new indicators and this and that. And it's like the shiny new whatever. But I know for a fact a lot of manual traders out there that still trade, higher time frame stuff. Maybe not intraday trading, but You know, a lot of these patterns have just been absolutely rock solid for 30 plus years in technical analysis land. So this is an inverted, means it could break higher. Now, if this does happen, if this is one of the pairs that any of your software is throwing your trades out at in NAV versions, mostly US based, where you have to approve the trades, I'm a lot less likely above this line, right? Can't really see this that good, so let me just jump back. I'm a lot less, let's see if I can find the neckline right here myself. I'd put it at about, actually fairly spot on. Just double check. You want on a inverse or right side up head and shoulders, you want to connect at least 3 candle highs. Put us probably about right in this area. So if we break the 89.20 level above, I would probably not want to be short. Let's just put it that way. There's my advice on that. GBPNZD, notice we broke a little bit above our, and then we came right back down. So understand the importance of moving averages. The yellow line here, which is more of a midterm moving average, it's the 100 line. It came right back down off it. Notice that. I mean, this isn't a hammer reversal candle, but this still is a bearish candle right here. It's hard to see. Maybe that'll be a little better. Then we printed a doji next, so hard to know what's going to happen here, but wanted to at least stress it. Gold, again, looks like we're triangling, building a triangle, possibly a bear flag to break higher, right? Gold typically goes up when the dollar goes down, right? A store of value in an underlying or depreciating country's currency. This is just obviously spot versus US dollar. All right, questions. Let me just go through a couple of these here. All right, first question is, I know you can't recommend specific brokers, but if you are in a situation like me and have to open 2 accounts with 100K in each, where would you do that? So the first question, Andy, I don't know if you're doing this for somebody else, and if in fact you are, make sure you guys are crystal clear on, can you afford to lose the 100 grand in each case? If the answer is yes, beautiful, right? Not that you want to lose 100K, but you want to make sure it's money that you can not afford to lose. That's the key. So when searching for brokers, you essentially want to find what's called a straight-through processor. You can also find, there's a lot of straight-through processors, and I've done on my Telegram channel, I've done an exhaustive discussion on that. So without further ado, just peel through the Telegram channel, you can see. But you can actually Google that. What I would do, quite frankly, and if you don't want to spend all the time on the research, is ask your up and down line. It is abundantly clear to even maybe the up and down lines that aren't really super plugged in at Auvoria, who the best brokers are internationally. But just make sure also inside the MT4 platform, you can go in and check to see if the broker's gaming against you. So just go on my Telegram channel. This will be like a homework assignment. I'll force you guys to go over the channel and find it. Yeah, so here, note this too here, guys. I haven't looked enough into this, so thanks for posting all this. It says, keep in mind, we're about to launch Neo the Legend, which can be traded at fully regulated brokers that offer low leverage. Thank you for that. Good point. Hi, Steve. I hope you're well. I am. COVID hasn't ravaged our family yet. We're all good. Thank you. I would be interested to hear your view on where USD CHF will move in the next couple of weeks. I still have an open sequence on variable, if I'm not mistaken, here reading this. So I talked a little bit about that. I don't know if you caught that or not. Maybe you did. USD CHF. If you are in a group of sequences and drawdown on this, You don't really want it to break the red line and go higher. It's really the bottom line. At least if you're in a bunch of shorts. If you're in a bunch of longs, obviously you want it to break the red line and head higher. Now, another thing I'm going to post here as well, there we go, is this graphic which I just posted on the channel. I'll go in and put the candle in there too as well. If you guys going to want to see this image, I can post that. This is actually pretty good. Just more macro analysis type stuff. And you don't really have to dive into the weeds on this. It just shows currencies against the US dollar year-to-date change. Just want to keep an eye on stuff that matters, right? Now, there's a lot of what I like to call open frontier currencies on this list. But, you know, just paying attention, like what's going on with yuan, right? You know, what's going on with, you know, some of the bigger ones. Franc, obviously, hasn't been a lot of change there in relation to the Canadian dollar. But if, you know, something really begins to drop down or go up into this list, it's something of note, right? And these are all conversions in relation to that. Yeah, so if you're in longs, you're going to want it to break that USD Swissy higher. That'd be good. Let me make sure I get all these questions answered. Yeah, and keep in mind, Judson, thank you. I have 2 infectious disease docs as clients. As many of you may not know, I actually specialize in physician, financial planning, so forth, business owner. It's where some of my biggest guys are. We know all about hydroxychloroquine, so we know all that. Key thing to fighting anything, guys, is to be healthy. It's really the bottom line. That I can knock on wood for. No high blood pressure, no diabetes in the Vetterl family, no inferences of cancer or dementia. So for that, thank the Lord. Although I do need to lose about 20 pounds. Somebody stole my mountain bike. So I got to go get a new one. Like, if you guys didn't know, all the bike shops in the US are like completely sold out of bikes, especially online. So finding a bike's tough. What else do I want to say about any of this? Good. S&P, you equity investors in the US, 401k folk, still looking kind of bubblicious. We want to continue to hold some of these support levels, and we give away under 3,700. We're going to be falling to the big support area, 3,550-ish. Yeah, Dr. Jeff, send me an email, my brother. I work out like a madman, but got to put down the whiskey and the beer to truly lose weight, right? So I think that's pretty much all I want to say. If you guys don't have any other questions about anything, we can end this early. You guys don't want to hear me drone on for another 20 minutes, right? Just want to stress the importance of these Telegram channels. Never thought I'd say that about a platform, right? This really is so much. This is so much better geared towards business and trading, though. I even like it better than Twitter. Twitter's turned into just a mess. So a lot of people are navigating over to Telegram and for following and so forth. So it's good that we're on a solid platform. There's tons of conversations here. Email is svetterl@auvoriaprime.com. There you go. It's in the chat window. You guys ever send me an email and you want sort of further analysis? Occasionally I'll get some subscribers that got bigger accounts. You know, do just know that it's always best if you guys hook up a MyFX book to the account. I know that's some cases a difficult endeavor, but is probably one of the most beneficial things you can do outside of listening to the calls for the developers and myself, right? Going through the Forex courses, in terms of risk management, it's probably one of the single best things you can do. Once you finish all of that, you want to be able to analyze your accounts. You can hook it up to FX Blue. You can hook it up to MyFX Book. You know, whatever tickles your fancy. There's tons of videos on YouTube about how to do it. There's two different ways to hook up to the algo. Just understand that these are analysis systems only. It can't trade your account. It doesn't see any of your master passwords. It is pretty darn foolproof in terms of analysis. And the best thing is it's free. You know, to get that other type of analysis and a lot of other accounts and stuff that spits out client quarterly performance reports, I got to spend thousands of dollars a quarter for Orion. So it's great to have a whole analysis system for free. I love it. Anyway, so this is a common question. Ken says, he says, in my FX book, my trader privileges are not verified. I know for a fact that, you know, I probably should have, there's got to be somebody that is besides Dasan. If you guys want, I can have Dasan talk about that in his next call, maybe just a quick run through on that, because he is a master at getting both of those check marks green. He's one of the few that I know that can do it. Maybe there's somebody else that's an expert on it if they want to offer up a little video on it outside of a lot of the stuff you see on YouTube. It doesn't really get into the detail of getting rid of that red check mark to green. It's kind of a pain in the ass, honestly. And I will not be an expert on that. I know for a fact, as Mariska just posted, we're working on a video for that. Maybe I just haven't been introduced to, because I just have Dasan go in and hook up all my FX books for me now. But in any case, that link right there may be pretty decent. Let's see what that looks like here. Yeah, I think I've seen this one. Yeah, I'm actually going to bookmark this. Let's do that. I'll watch this. It's 12 minutes. Should be pretty good. I always get a kick out of the comments down here. It's hilarious. In any case, so that's the story on that. Jenna, you're welcome. Thank you. Should it be green? Yes, it should be green. I already talked about that. Did you ever cover NZD USD? All right, let me take a look. Where are we here? NZD USD. I'll tell you, I'm just not a fan of the pair. I think I deleted it off the list. Yeah. Let me put it back on. By the way, guys, these Oanda, the big Forex broker in New York, they won. This isn't a recommendation on them, by the way. They won because these guys are a dealing desk broker. But for those of you that don't care about that, you know, or maybe trading arrow in the account, you want a US based broker that has a really good reputation. You may want to take a look at that, but that's not a recommendation. So they did win the awards here. Where'd it go? All right, so here's NZD USD. Let's move this up into our new group. Let's put it so daily chart on this one. I don't take a look at this much, you guys, so bear with me here while I get built in. I'll go look at the weekly on this. Since been all over the place. Jeez. Notice when you don't see a lot of patterns on something, you know, other than a little bit of support and resistance here, but you just don't see it acting right. That's another reason I just don't trade some of this stuff. I have no idea what the win rates are for any of our algos on this pair. I probably, if you are, unless this thing's got some insanely high win rate on a piece of software that I'm not familiar with, and I certainly could just be dead wrong. I don't know that I'd want to trade this, guys. So, but just looking at support and resistance levels long term here, it's essentially right in this area, this whole 73, 60-ish area. Notice it rejected its first close run to that, and then came right back down. So depending on what kind of losses you're on and what kind of sequence, whether it's long or short, or a combination thereof, looks like we may visit this point again. But a lot of this is just going to be dependent upon, what's going on with the dollar. Always do that research first. GBP NZD next week. Let's take a look at that as well. Daily. This thing's done real well in terms of holding up, at least recently. Right? Notice we poked our head above this area on the daily and almost touched the moving average there and came right back down in it. So that was a rejection of this area. Doesn't necessarily tell you that it wants to travel all the way down, because there's a whole bunch of but ifs as to whether or not, but I would expect it to stay inside the top part of this range at some point. CAD JPY. Well, we're getting exotic today, aren't we? All right. Yeah, that's the problem, Brian. It probably tore up the chart towards the end of November, and that's the difficult thing about a cost averaging system. It's going to continue to try and fight that freight train. It's just not something I want to be on. All right, so let's take a look at this. Yeah, I think that'll add in. Questions? Anything else? Later, I'm going to look at the CAD JPY. Am I losing it? There we go. See, this would probably be a chart, and the problem is just the lower volumes on this. But this would be a really good chart to drop a market profile chart on from a volume profiling, so you can see where all the volume is executed within all this. It puts it on a bell curve on the left or right hand side, and you guys may see I put on some of the charts. That would probably give a little bit better understanding where all the volumes are. You can use that in confluence with all this, right? Because this is all price action, right? And moving averages based on price action. Notice that with the exception of, and we have to be trusting individuals that all the data feeds that the TradingView developers swear to me 10 ways to Sunday, that is very solid data coming in. If in fact that is the case, doing a volume analysis and then a time-based analysis and putting those aggregates on a bell curve is just a fantastic piece of analysis to do. It's much easier to do on currencies and commodities and futures, which almost all trade on the CME or the CD, the CBOE. These are all Chicago Mercantile Exchange executions, so you can actually see the volumes that produce. So a lot of my old stuff, which I still use a lot, is based on time and volume-based analysis in the aggregate, because a true instrument, if you will, like an equity or a future that trades by the big shops, are going to be more. There's going to be a lot more solidity, if you will, in volume patterns, meaning that most of something executed from an order flow standpoint at this particular level, right? Outside of just, technical analysis on price action, which is primarily what we're doing here. But I'll be layering all that in eventually. I just don't want to get these charts too confusing, because a lot of people, they begin to glaze over on a lot of this stuff. But this essentially is a market profile chart from a volume-based analysis on the S&P 500. So you can see where the value areas, which represents 70% of trading volume, where it's building. And then there's always a center point, or what they call a point of control. In this case, it's a VPOC, so it's a volume point of control. That puts a very, very strong support level on the S&P at 3250. So you can overlay this kind of analysis on anything. And they're telling me it should be solid on Forex, but I don't know. I guess I just don't. I trust the data feeds coming out of, NASDAQ, New York Stock Exchange, coming out of the Eurex, obviously, coming out of anything that's CME, because it's all aggregated and exchanged on a single index or a single exchange in most cases, right? Even if it's a sauce executed order for a pink sheet NASDAQ, it's still reflected in the overall volume. So sorry if I lost anybody by that, but it's an explanation I think is something we need to all start to take a look at as we advance our technical analysis. So Dr. Jeff posted, thank you, sir, for 2 videos, I guess. What was the next one he posted? For hooking up MyFX books. Again, this is a big risk measurement. This is the link right here. I got it bookmarked as well. Anybody's got any questions, feel free to. VIX is coiling. Yes, it is. Keep in mind the VIX is I'll show you guys here. The VIX is a volatility measure. Once this thing spikes to these really high levels you see here, kind of like we did during the pandemic, see these ridiculous levels, all things can become more volatile. So I can talk more about this if you guys want. It isn't necessarily a precursor to any other move unless this thing really spikes. And in which case, the problem with things when VIX is up in what they call a nosebleed section, which is really anywhere above 40, in my opinion. Here, I'll show you guys. Win rates on just general patterns have become lower because the volatility is higher. And this is the case generally for almost any instrument that publicly trades, including Forex. So you want to be on high alert, as I was talking a lot in March about, and this is why for just chunks of the spring, as all of this was playing out in the pandemic, I wasn't trading a lot of stuff at all. And quite frankly, if I had been, I probably would have much lower win rates on all of my trades, and my losses would be something to be pissed about. And I am probably more so than many. I am always an advocator of just sitting in cash. I think the problem a lot of traders have is they have, and I see this in mass among new traders, they suffer from one of the most, I don't even know how to put this, one of the most disaster-based mindsets you can have, and it's called FOMO, which is a fear of missing out. And it is a real detriment to the psyche that you need to build to yourself as a trader. There's nothing wrong, in my opinion, with sitting in cash for months, right? Now, I get it. There's going to be people out there like, yeah, but I'm missing opportunities. And, yeah, but I mean, if the software you're trading or you're trading, your win rates are lower, then, obviously your risk is going up. Because to me, everything's win rate. That's really the bottom line in trading. If your win rates for any product that's being traded for you or you're trading, are above 60, 65 or higher, that's good. That means that you can take a little bit of losses, right, and hold your winners for longer term gains. And I'll leave it at that. But we'll keep in mind Keep reminding me in there, Anonymous, on that VIX. Keep me live on that. Yeah, we already looked at that. Euro AUD, I did not look at, did I? Here it is right here. Longer term analysis on this one. I always want to see longer term analysis. This is a weekly chart here. Because when we're down near these areas, I want to see what's going on. Back to where we were end of 18, beginning of 19, right? Sort of the cliff, if you will, is this 57 area, 5,700 area right in here. Yeah, right in here. If we get under this, we're probably headed down here. And probably in a straight line, guys. So just keep that in mind and jump back to the daily. I don't know that I'd want to be accepting any longs under this level. Unless it's a quick shot trade, like something that's just over traded down. I think what I'm probably going to do next, which hopefully doesn't make everybody's head spin, is I'm going to add Keltner channels and Bollinger Bands to all these charts. And what they do is they're measuring a level of standard deviation, sort of like a band, if you will, along with, and anytime we get above these levels on, like standard deviation or some sort of Keltner channels, like they kind of do the same thing. They just measure almost like an average true range type of, and if you're trading inside the bands, it's good. If we get just completely outside the bands, especially on any kind of instrument that is mean reverting, the tendency is for it to want to trade back into at some point. So when you get just really, unless the VIX index is going bananas and we have all kinds of volatility going on, any break above a Bollinger Band or any Keltner channel, I kind of run the same, is an opportunity to trade in front of the freight train, which is very rare for me. And I'm not going to get too much into teaching that, but it is a reversion to the mean essentially trade. And when you have to be really outside of some of these standard deviations, I talk a lot about that rubber band getting stretched. So, all right, cool. So now everybody's head's thoroughly full of information, and hopefully I haven't lost you. I wish everybody a great trading week. Send me an email if you have any questions, and hopefully everybody gets 2 green check marks. Looking up their FX books now. But other than that, continue to follow on Telegram. I will put out the notes here as soon as Tyler gets finished with Gearbox updates. We'll put the notes in. We'll have it ready for our Australian folks, hopefully later today. And with that, better all off the mic. Be safe. May the trades be with you.